You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. And now, get ready to hit the Option Block.
All right, everybody. That music means it is time once again for the Thursday edition, aka episode 2 of the old OB. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from this enjoyable network, at least we hope so, upon which you are feasting, not just on the Option Block, but on all of our other fun programs. Education Wednesday hitting you yesterday. Our guest got sick on Tuesday for the interview, but we've rescheduled them for another week. Some more interviews coming your way. Of course, later today, you got TWIFO, tomorrow Vol Views, and it all kicks off again with a lot more fun next week. If you like not just this show, but any of the other shows you listen to on the full network, make sure you keep those reviews coming. New folks are continuing to discover the network pretty much every day out there. So let's keep that flow coming. So keep those reviews, those comments, as many stars as you want to give. If you want to knock off a half a star for the Rock Lobster, I won't hold it against you. Of course, keep those questions coming. We do love to hear from you guys. And let's see who else we're going to hear from today, since I have once again unfairly maligned him before the show has begun. We will start once again with the rockingest of lobsters, Mr. Andrew GIOVINAZZI from OptionPit.com, by way of Carmen Lion Capital, by way of the principality, nay the duchy known as Maine. Mr. Rock Lobster, welcome back to the program, sir.
You know, I was thinking of actually turning my background cricket noise up louder for you today, so it was playing the entire time I was on the segment.
I'm sure we'll get it back. I'm sure we'll have it back soon enough.
Yes, they're there. They're just not. They're not as loud today. Not as loud.
They're tuned in. They want to see what's going on the show. They're excited. They're interested for a change. The crickets, sometimes they get a little bored, but today they're dialed in. They're ready to go. You know who else is dialed in and ready to go? The uncleest of Mikes, Mr. Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, to you as well.
Always happy to be here and always happy to be dialed in any way I can be.
All right, he's dialed in. The Rock Lobster mostly dialed in. I'm certainly dialed in. Are you dialed in? Let's find out. It is time for the Trading Block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show we break down what the heck is trading out there. And it's another weird one, another weird day that ends in Y on the street. You know, for a while there, we had a protracted series of multiple 1+% sell-offs out there across all of the major indices. It seemed like maybe correction territory was afoot. Then we saw a pretty strong rally recently. And then coming into today, not so much. The markets are a little bit, well, they were mixed. Now they've all just ticked down since we started the show. I think Uncle Mike may have spooked them. Come into showtime, we saw the VIX. It was about a half a point lower than where it was on our last show. Remember, it's been a full week since we've all been together here on the show. Blame the Labor Day holiday. So VIX was about a half a point lower than where it was a week ago. It was coming into showtime exactly unchanged, 29 even. That's pretty much exactly where it was this time last week as well. So apparently nothing happened over the course of the intervening and past week there. Just a whole week of nothing. Not much going on at all. We're exactly where we were last week, at least from a VIX cash perspective. You know, if you listen to this show or the rest of the network, the VIX cash is merely a blip. It's like the tip of the iceberg. There's so much going on beneath it. And that's where the interesting stuff is afoot. Like the VVIX, how much volatility is actually moving. You know, we like to look at that barometer there of around a 120. When this hits a 120, yeah, things are getting frothy. Things are getting a little bit top heavy, perhaps, at least from a vol movement perspective. Maybe it's going to drop down, or maybe it's going to keep exploding to the upside, you know, but you know something's going to happen when it's around the 120, and it's exactly there right now. Pretty much it just ticked up again, like 120.01, exactly at 120. That still puts it down from our last show, about 5.5 handles from where it was this time last show, but still frothy, still juicy. It's nowhere near its bottom end of the range, which is typically around a 75 or so. That's when things are pretty tranquil. If you want to hear about that, go back to our shows from 2017. We had a lot of those for quite some time. Vol was not moving. No, it is moving, though. Is VXX perhaps back finally in the direction that the hardcores like out there? It's down to about a 27. That puts it down about 2.25 handles from last show. So it was threatening 30 to the upside there, now coming back down again. So the upside in VXX, as usual, kind of short-lived. Not a lot of juice to be found out there. Of course, it all depends what's going on in that VIX futures term structure. We'll get to more of that in a little bit on tomorrow's show on Volatility Views. Maybe if I twist his arm, maybe the Rock Lops will touch on a little bit of that today. Maybe he'll bring back his old friend Volman, everyone's favorite out there. What's not people's favorite today, of course, is the jobs data. Bit of some mixed data. I think maybe fair to say not that good data hitting the street today. The markets were mostly shrugging it off in the early session. Seems like the worm has turned a little bit now. We saw jobless claims rising for the third straight week. Maybe not the best sign. Maybe some people thought after they had a nice blush of gains there, they thought, okay, maybe the labor market was recovering a little bit, maybe not so much. The number of Americans who applied for unemployment benefits through state and federal programs rose for the third week in a row. And initial jobless claims filed through the traditional methods. That's important. We'll get to that in a second. Through the state offices. That was UNCHD at a seasonally adjusted 884,000. Of course, economists were expecting that to be reduced to 840,000. So not exactly a bullish sign there. New claims, though, when you add in these new methods, including self-employed filings, that actually increased. 838,000 people filed under that version of this new flavor of self-employed workers. You add those two together, you got about almost 1.7 million. That compares about 1.59 million from a week ago. That's the fourth week in a row that these federal combined filings, as aggregate filings, including self-employed, have increased. And the continuing jobless claims, folks who already applied and are continuing to receive benefits, that's up by nearly 100,000 as well. That's about 13.4 million. That's the first time that's ticked up in over a month, about 5 weeks. So add them all collectively together, and it's a whole bunch of negative pretty much for the economy out there. Not a lot of really rosy, or even through rose-colored glasses, you can't really look at a lot in there and see that's optimistic. But the market seemed like it was kind of shrugging it off. Now it seems like the worm turning a little bit. You know, when the worm's turning, we got to go to Uncle Mike, 'cause maybe he can talk it back up. He is our resident permabull. Mr. Uncle Mike, sir, what is lighting up your tape on this? I guess where you look, NASDAQ just ticked up. So maybe NASDAQ's feeling Uncle Mike type of day, sir.
Yeah, this is a unique day in that, it's over the last couple of days. So we have the market just craps the bed on Monday. And then yesterday we have a pretty large increase. And then today we're just kind of flat. So I shouldn't say flat. We're down slightly. So we're down 9 points on the S&P. But when looking at all this, I just think we need to look at the bigger picture with this, is that this is just an old-fashioned pullback. Where the pullback's going to stop, who knows? We have certain levels of support with which we can look at. I think that one one of the nice things about this market is if you can do it in a risk managed approach. I always like support levels of around where the beginning of the year was. So that way, let's say that if the market goes negative, or if the market goes down, you have that kind of mental number. And if you can do it in a risk managed way, if you can sell premium around some of those levels, which you can right now, and get some decent premium, then you can say to yourself, okay, if this actually goes in the money or goes against me, then the market's going to have to go negative in order for it to do it. And sometimes that can be a hard thing for the market to do. Now, of course, as we saw with price action last week, it could just blow right through it. But that's why I would emphasize doing anything like that, whether you're selling puts or selling some put spreads at the low 320s in SPY, which I'm not right now. I was in one yesterday and I got out of it for profit yesterday. If you're looking to do that, you have that is kind of a factor that would be in your favor, in my opinion. In terms of some other things that are happening, not a lot of major movement in my beloved shiny silver. And Apple, it's not at the all-time highs anymore, but it's still kind of hanging in there right now after everything it's been through. It's kind of like it's in good shape for the shape she's in. It's not in great shape, but all things considered, Apple's not doing that bad right now. So a lot of things happening. I think that the news that came out recently that vaccine might be available by October, November. And then Trump says, the Democrats are trying to make me look bad and they don't want the vaccine to come out. Then Biden comes back and says, I'd love the vaccine to come out, even if it cost me the election. If it saved the people, I'd be totally happy with that. So who knows what that means. But most doctors that I talk to about the whole COVID thing say it takes a while. It's going to take a lot longer to know if it actually works from traditional trials. So a lot of the news that we have is unknown. But the good news is that we live in the greatest country in the world, and markets are still pretty close to all-time highs right now.
They are indeed. Even after that protracted nearly a week of sell-off, not that different from where we were a week ago out there on the broad market. Speaking of the vaccine front, you're right. There has been some kind of mixed news out there. AstraZeneca, the leading candidate, it seemed like, out of the UK, had to put their trial on hold, of course, for a mysterious illness that popped up in one of the candidates. Again, there's only one candidate, so we don't know how widespread that is, but that was serious enough, apparently, for them to put a halt on the whole thing. So that kind of spooking some folks a little bit as well. Hopefully that'll be resolved in the near future. We can get these vaccine trials back underway. Mr. Rock Lobster, same question for you, sir. What is lighting up your tape? And is our old friend, Mr. Volman, is he going to make an appearance today?
Volman might make an appearance, although he's noticing some trends. He got a little scorched on this upswing in vol. Although I own a lot of upside vol, it wasn't enough because I was leaning pretty short. We didn't quite have enough of a pop to kind of pay for my the puts that I own. I paid for a bunch of them, but not quite as much. So we'll see what happens by next week. But the September cycle is it wasn't super good to Volman this time, even though I did own a lot of calls. I did sell them, and we did have a pretty good pop. But the position was more poised because of the way volatility was setting up, right? We had last week at around this time, I believe, that October future, I think, was like $9 over cash. And that usually is just, it's almost like the balloon is ready to burst with the market going down. So I figured, hey, upside, I didn't need to be too close to the money on VIX. I could get away with like 35 strike and higher. And that's kind of where we went and stopped. And while they gained some value where you could sell some, it wasn't the blow off that the futures, I guess it was saying mid 30s, which is fine. But literally, I think we got to 31, 32, mid 30s exact, and VIX just stopped after 2 days. It was pretty amazing, actually. And I think there was something with SoftBank buying a bunch of calls and making a bunch of money. I'm not quite sure how that all works because of Wall Street reporting is Usually not as accurate because they don't know the whole story. But there was certainly, I'm pretty sure the entire August rally got taken out in 3 days. TOSAW might be able to correct me on that, but the NASDAQ August rally, I think that last 10 or 15% totally went away. So as of right now, what do we have? Vol is like a hand grenade going off. And it takes longer to put the shrapnel back together, so to speak. Yeah, so I think, we did. We got the top for QQQ is just over 300. And I think the bottom tick was probably 260 something, let's say call it 270. So it's a pretty, the month of October or month of August basically just got, and we're kind of about sort of right back there again. So as far as from a vol point of view, I think what we have is this sort of high orbiting volatility, where because the election is there and the November cycle is kind of looming large, and I'll expand on that in a minute, it's hard for vol to come down too much, and it's hard for vol to go up too much, right? So I thought we would get more of a pop because, I was kind of expecting the balloon to either burst big or the rally to sort of stay real. It was kind of like one of the two, but sort of a huge binary outcome. And it moved, but not quite enough. Right now we're stuck with the election, right? So if you think about it, the NOV 20 cycle is about 2 weeks after the election, which for all intents and purposes, the election should be finished by then, not during the election, but because of all the mail-in stuff, right? There's all these mail-in, and lawsuits about when you could count things, and it's all of a sudden by every state has gotten very confusing. But I would figure that by 2 weeks after the election, they should have these ballots counted, right? As people decide not to go to the polls and mail in. So I think this has just added more confusion to the process. And that's keeping that, the November cycle up. The November cycle is about a 26 vol average at this point, which is pretty freaking high. It's actually higher now than when we had the vol blow up in 2016. And I don't know the reason exactly. It's kind of odd why it's so high, to be honest, because, Democrat, Republican president, and maybe they think this time is different. But, if you look at historically, the Democrats have done a pretty good job with the stock market. You could, argue about the politics and everything else, but if you look historically, it wasn't terrible. You had Clinton did pretty good. And then I guess under LBJ in Vietnam, that was kind of a market rally, Truman after World War II. You look at some of it, and it's not as bad as everybody thinks. The Republicans tend to have the market just gets to crazy dizzying heights, and then you have a crash. And then the Democrats take office. So it's kind of, you could pick it. So I still think that the bid for vol is odd this cycle, basically, with, either way, Biden is kind of a moderate as much as he tries. So maybe people do think something's going to change. And that's why the bid for vol is here. I don't know exactly because we don't know how it's going to turn out. I just know that this is a historically high bid for volatility for an election, at least that I can remember in the vol cycle. We have had sell-offs after the election. If you remember in 2016, I think the Qs got down to 115 or something. After Trump got elected for, I don't know, because I think everybody thought he was going to go after big tech or something. It ended up being a pretty good buying opportunity, maybe 120. So you have those things going on with the huge run up in what I would just call the big technology stocks. So you've got a lot of, there's the stock market is, nobody wrote a book yet that has it all figured out, except that, if you generationally buy once every 10 years, when everybody doesn't want stocks, you should do pretty good. That usually is something that works. You just kind of have to kind of hold your nose and do it. But as of right now, you do have stocks at near all-time highs. The Qs are still I mean, they're not the crazy highs they were before, but they're still, pretty fully priced. So that's part of the reason. So vol is waiting for something to happen now. I mean, we did get that kind of blow off from what we'll just call the gamma squeeze from SoftBank, if that's even real. And now we kind of sit here at this level. But if you notice, so the NOVE, I believe the bid will stay for November as long as it's sort of agitation, it sort of exists for the election. So it's clearly, I don't really feel like an economic thing. It feels a little messier than that. At least just that's the way it's pricing. And that could all change if one candidate just takes off and pulls somehow, or there's some drastic change. So there's massive opportunity because the vol is crazy high. But I guess the big question is, like, how long is it going to take to settle? So right before this week, literally, I think Tuesday of last week, we had the low tick for VVIX of the COVID era, right? And I look for stuff like that, which is, of course, what I kind of loaded up on, like the short vol, the strangle with the more short delta close to the money, and my long delta is farther away from the money. Because it looked like, okay, the vol was finally going to, was going to break one way or the other, but that was still a signal, right? You got to make lows to make new lows for volatility, at least if you're trading it. And that was the low tick pretty much for this cycle. So it looked like things were getting better, but then just as fast, I guess, the crazy rally the next few days in the Qs kind of stopped that cold, simply. So that low was on the 26th. I think that might have been the date that Abbott said they had the quickie tests. We had a plunge in vol, and then we had that huge ramp for the next week in the Qs. So I think that's where we sit now. VVIX is back up at a pretty high level, and it's more of people don't quite know what's going on anymore. So we'll see. But I think as a trade, I think owning the NOVE and just selling everything in front of it until November 4th might be a pretty good idea if you like calendar trading. So anyway, that's what I'm doing. And we'll see what happens by the time it all settles out. What I do have a hard time believing is if we could actually reach those highs again. It feels like that's sort of, there should be some kind of a lid on the market, at least until the election is out, because we kind of already set that high. So I'm kind of thinking we're sort of range bound on the upside with, again, any odd surprise. I think the market won't take it very well, just the way the vol has been pricing things lately. So kind of a long-winded explanation of what I think is going on.
That's why we pay you the big bucks for the long win, sir. Do you recall off the top of your head what that low tick in VVIX was, sir?
I do. I'm looking at it right now. It was 149. 149. And the other one that was close was we had like a 103.73 in June. Remember when everybody got happy again about oil and everything, and the COVID, it was like everybody's just getting out of lockdown. That was the last low vol tick. And then everything exploded right after that. So we have two kind of similar things where, like, the worm kind of turns if there's an expectation of like this COVID not being as bad as everybody thinks, and then literally there's cold water thrown on it by something. It doesn't go away, re-lockdowns, whatever. And I think that's what happened both times. And so just for reference, from the 100 tick or near 100 tick, VVIX hit around 140 this time. And that was probably Friday, I think, was the high. Friday last week. And then it might have been Thursday, actually, was the high tick for VVIX. And then you saw a 170 high for VVIX on June 12th. So huge jumps in vol, and then it took probably 3 weeks for the vol to get back near 100 again, even close. And it never really got that low until, again, just recently at the end of August. So it's taken a long time, and like these vol sell-offs, it just takes a while for the vol to go back down again because, I think the market's looking for better news every day. And if it doesn't get it, you don't have that willing seller of options, right? That's how vol goes down. People have to come in and sell them. So I think we definitely have a lower level than we had. We've had 4 straight days of vol going down. Today will be the 5th, it looks like. And from there, we see what happens. But, I'll say the vol prognostication, though, for vol views tomorrow.
There you go. That's where the smart money is. Saving it for vol views. Yeah, I'm looking here right now. Maybe we need to update our frame of reference here for VVIX during the COVID era, because that previous lower band of 75, we haven't gotten a whiff of that pretty much the entirety of 2020 here. The lowest we got was pretty much in mid-January, about an 86 and change. So well north of 10 handles above our previous, lower band for VVIX out there. So the COVID era, and this is actually, of course, pre-COVID, really. There were other things going on mid-January, but COVID was still a bit of a twinkle in the eye on the future there. So yeah, nothing even approaching 75 to the downside there from a VVIX perspective. What that means, listeners? Vol has been frothy. It has been moving. Let's see if VIX is keeping pace, and all the major products out there are keeping pace today. Let's see what's lighting it up. And coming into, as of a few minutes ago, VIX was doing all right, I suppose. Not quite half of its ADV, but that ADV has ticked up. It's up about 40,000 contracts from our last show. So it's up to north of 400,000 now. 404 is the ADV in VIX coming into today. And right now, about 189,000 contracts on the tape. So closing in on half of its ADV. SPY, though, doing a little bit more paper, about 2.5 million contracts exactly. The ADV, 4.1 million. So SPY has ticked up quite a bit as well. The S, 521,000 right now. The ADV finally back north of a million. Almost 1.1 million contracts out there. Took a while for the S to get back up there, but apparently the last few days of sell-off and now the rally has helped to do that. The Qs, 883,000 right now. The ADV and the Qs, 1.3 million out there. So the Qs have been on fire. No surprise there. And the small caps, IWM, 209,000 contracts. 418 is the ADV out there. We'll get more into small caps in a little bit. We'll have the once and future Dr. Bix joining us on the old TWIFO as well to get into all things equity vol, maybe talk a little bit about that upcoming NASDAQ volatility product and a whole bunch more, as well as everything lighting it up, energy, you name it, correlation. Bitcoin, got some questions about that, how it compares to other assets. All sorts of fun stuff coming up on TWIFO, but that's in a little bit. Right now, let's break down here the top 10 most active names lighting it up right now. Number 10, an old school name back on the list, Telephone, a.k.a. T. And you're old school if you call it telephone. That's what the old timers used to call it on the floor. The C-bone I got there. Apparently AT&T was too hard to say. So telephone was easier. So they called it that. 191,000 contracts is what it cost you to break into the top 10 today. That's pretty robust paper. Number 9, AMD, perennial top 10er right now at number 9, 220,000. So, we're already over 200K at number 9. That's a pretty robust day. Number 8, our old friend DraftKings back in the top 10 here, 222,000. Number 7, Nikola, the other electric vehicle name out there these days that's getting all the love, 224,000. Number 6, Peloton, back in the top 10 now. There are rumors, or I guess an announcement now, of a new bike and perhaps a new treadmill. So they're doing the old Apple upgrade cycle. Got to upgrade your expensive hardware every 2 years. Whatever happened to a durable good? Apparently that's not in the business model for Peloton. 234,000 contracts, though. It's good for some paper today. Number 5, Bank of America, 239,000. Number 4, Softy, holding firm at 282,000, announcing their new Xbox console coming out later this year. Driving some paper out there. Number 3, Facebook, pretty active today, 387,000. Number 2 and number 1, I think you can guess what they are. And they're pretty lofty. Number 2, Tesla, 1.03 million. Yes, back in the M category for Tesla. And it's just a little bit past noon here in the one true time zone. And Apple, number 1 with a bullet today, 1.5 million contracts. Post-split doesn't seem to have slowed these bad boys down at all. They're still rocking and rolling from a volume perspective. Let's look really quickly what else is lighting up our tape before we move on into the odd block. Got some earnings popping off here later this week. We have Slack today. Slack was Tuesday. Navistar and GameStop, everyone's favorite short out there. GameStop on Wednesday. Today after the bell, we got the old PTON, probably why they're in the top 10 there. CHWY, Oracle, and Dave & Buster's. I saw that Dave & Buster's is still open recently. I got an email from them, and I was like, how are you still open? It's like the definition of high touch, but apparently they're doing it. Dave & Buster's, let's see right now. We have the earnings move reports for them up there on theoptionsinsider.com, available for you guys completely for free. Let's hit a couple of these really quickly. Dave & Buster's, ticker PLAY, P-L-A-Y. They were at 18 and about a half coming into this report. They were pricing in $1.81, and in the past they moved about $1.46. So a little bit rich on Dave & Buster's. Maybe you can argue that they merit it given we're in pretty much the worst possible environment for a high-touch type business like Dave & Buster's. Peloton, let's see how they're looking. Of course, this pandemic has transformed them into literally the only gym in the country. So they were at 91 and change coming into this report. They were pricing in $10.14. That's a mighty rich straddle. And in the past, they've moved $8.31. So pretty rich, nearly $2 worth of premium out there. CHWY, of course, the online dog and pet category, 61 and a half exactly coming into this report. They're pricing in $7.17 in the past. Get this, listeners, they moved $2.47. Wow. That's some rich vol. I'm not sure what's afoot in CHWY. I'm going to have to go check that one out for myself. And, of course, Oracle, they got caught up in all this TikTok drama, the will they, won't they dance, Oracle, Microsoft, Walmart. Who will end up the bride in the TikTok wedding? Well, I guess we'll find out soon enough. But Oracle was at about $57 coming into this report. They were pricing in actually less vol, $2.52. In the past, they've moved $3.37. You think there might be a little bit of TikTok premium built into there, but apparently not. The market says nay. And the market has also been pretty much blood red for the entirety of this cycle, at least from earnings vol buyers. If you want to see that for yourself, check out the earnings season report over there as well at theoptionsinsider.com. But of course, now it's time for us to keep on rolling. It is time for the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. Let's do it. Let's dance. Let's get weird. Let's get wild. Let's kick it off. We were just talking about this name, listeners. I jokingly referred to it as everyone's favorite short, but maybe that's the case given today's paper. Yes, I'm talking about GameStop, another one that's had their struggles. They already had problems because everything in their business, the gaming business, was shifting to digital. The console manufacturers like Xbox and PlayStation looking to keep a lot more of that business locked to their digital platforms. Forget about the old discs. And certainly the secondary market where GameStop made all their money going the way of the dodo. Now, of course, no one can even go into their stores. If you do, you don't really want to. So it's been a 1-2 punch for them. Business model on the decline. Now the pandemic really causing problems. The stock right now, ticker symbol GME, of course, game at $6.44, off another nearly $1, about 12.25%. It's been a rough and tumultuous year for GameStop, as you might imagine, listeners. A year ago, they were trading $5.09, so actually south of where they are right now. And then they had a bit of a rally, maybe a little bit of a reprieve coming into the end of the year. They got up to, looks like about, almost $7, about $6.70 in December. And then the new year kicked off, and they didn't even wait for the pandemic to start. They just started selling off. By the time of January 30th, they were trading $3.93, listeners. So a rough run. And they kind of languished in that period for a while, all throughout the madness of March. They actually were ticking up. By March 26th, they're at $4.41. Then they sold off later in the year. They sold off April 3rd is when they hit their nadir of about $2.57. So a full, not quite a month, but pretty close to it from when the rest of the market really started selling off in earnest. So a bit of a weird chart for GameStop. And they ticked up almost instantly. From the 3rd, they were trading $2.57 by, let's see here, the 14th. So less than 2 weeks, they were trading nearly $6, $5.95. So they had quite the rebound. I'm not sure what they were pushing. Maybe just the general desire for gaming was driving a lot of business to their platform. Either way, they turned around pretty hard, and then they kind of topped out about $6 on May 1st. And they sold off again down to about $4 on May 29th, and they kind of languished there for a while until recently. They're trading about, $4.81 on August 18th. By the 27th, they were trading $5.25. Then they gapped up again to $7.71 recently out there. So perhaps short squeeze. I don't know what's driving this bad boy up recently. I don't think there's a buyout looming out there. Maybe. I'm not sure who wants to pick up that asset. But weird stuff afoot out here, Mr. Rock Lobster, which brings us to today's paper. our Eye of Sauron has found some weirdness out here, including 18,502 of the July 2021, so next July, sounds so far away, 2021, when you say it out loud there, $10 puts. Yes, the 10 handle puts, so roughly $3.50 in the money puts, going up for $5.85 through the offer. The offer, these went up late though, so bear that in mind, but still, I don't think you're playing much with a print of this size in GameStop. The market at the time this went up was $5.30. At $5.80, they went up for $5.85. No surprise, they're paying more than the offer to get nearly 20,000 of these bad boys. I don't think this print was for that much size. That offer was only good for 585, so they needed to go a little bit beyond it to get this print done. This is obviously post-earnings here, and almost 50% out of the money. If you're wondering, it's 143% implied vol. So obviously, there's a lot of cycles between now and July. The next one is December 8th. Mr. Rock Lobster, this one is intriguing and or head-scratching here. At this point, you're buying a nearly $6 put on a stock that is a little bit north of $6. So you're paying nearly the price of the stock for a put that is $3.50 out of the money. At this point, you're just short in stock, and you're doing it for size. Mr. Rock Lobster, is that your take as well?
I think that's what they're doing. I'm just looking at the pricing for this is going to become a hard to borrow, where the borrow rate goes insane, and so they're buying these puts, and I guess they think they're going to squeeze $3 out because they think GameStop's going to zero. That is the only thing that I can divine from this. So just deep in the money put buy, and they think this company's going to zero. That's because they don't want to get squeezed on the stock later on. They're paying the juice now instead of paying it later. So apparently somebody has a no bueno axe to grind for GameStop.
This does seem no bueno. I'll put this in our to be watched category. I'll probably come back to it sooner than next July. Yeah, this is not a hedge. Listen, before you argue this is a hedge. If this is a hedge, I need to talk to this person because they're doing it wrong. This is not the way to hedge a $6 stock. This is clearly straight up getting short. The stock is hard to borrow, so that probably is reflected in this a little bit. A lot of folks probably want to get short. $6 for the 10 put, almost. I don't know if that would be my preferred method of operating out here in GameStop, but clearly someone wanted it to the tune of nearly 20,000. That's an interesting one and perhaps a hard one to swallow out here. Not a huge fan of that one, but hey, we'll keep an eye on that one. And hey, I'm not exactly bullish on GameStop, so at the end of the day, he could end up getting his roughly $4, but it's a lot of capital to commit for that $4. You could go a lot of other ways. Let's just put it that way. What are your thoughts, listeners? Are you as bearish as apparently this person is as well on GameStop? You have other ways you would put this trade on? Let us know. Hit us up in the comments or in the live chat. We'll move on to our next one here. This is CPRI Holdings. I'm not familiar with this one. This is a Michael Kors company, it sounds like here. I'm not sure what brands. They have also shoes, watches, and handbags and other things. So all sorts of they own Versace and Jimmy Choo, so a lot of high-end fashion accessories here. Let's see. Ticker symbol CPRI, not Capri Sun. Now, that would be fun, but CPRI Holdings out here. About 18 3/4 is where it is right now, listeners. Up nearly 81 cents, or about 4.5%. So a good run here today for CPRI Holdings. Let's look back at the year, and this chart does not look favorable for the year. A year ago, they were trading $31.50, listeners. So roughly 2x, not quite, but close to it out there right now. They got up there, though. They got more than 2x, so they topped out right before all the madness. Actually, by the end of last year, they topped out at right around $40, $39.90. So pretty much a little bit north of 2x of where they are right now. Then they began a long, slow decline from early December. They started selling off. And by the time the madness happened in March 19th, they got down to $5.42 intraday. Looks like they closed at $7.52. So they rebounded a little bit that day. But the madness really clipped the wings of this one. Obviously, high-end luxury fashion items, probably not a huge demand for those, particularly in the teeth of the madness. They rebounded pretty quickly. They got up to $13.44 by the 26th of March, but then they sold off again down to $8.50 almost immediately. The next week they sold off again. So another one of these ones that had a lot of fits and starts until it topped out. I dare you to guess the date, listeners. It topped out at $23.29. Yes, on June 8th. Once again, add Capri here to the list of names that had their recent apex on June 8th and have not looked back since. And it sold off pretty hard from there, 1437 within a few weeks to where it is right now, slowly drifting back up to 1879. But again, well shy of that June 8th high of 23.29. So let's see what our Eye of Sauron found out here today, listeners. Looks like some calls here to the tune of about 4,000 of the SEP 18 halves. So these are pretty straightforward weeklies at this point. Going up for $1.02, pretty close to the offer. These were 93 cents at 108. It's actually got a little bit of price improvement on this 4,000, which is interesting because I can't imagine Capri does a ton of paper. The earnings are coming up, but they're on the 4th, the next cycle out here. Our friends at Orats also picked this one up on their radar as well. They said it has the third highest volume to its recent normal volume right now. It's at about nearly 13,000 contracts right now as come into Showtime. Their typical ADV is about 4,300. So this one print is almost the entirety of their ADV, which is another weird one why they got a decent fill on this. That's interesting. Doing their entire day's worth of volume in one print, and they actually got some price improvements. That shows that market had some room to run. Oh, they have a good broker. Either way, let's see. Calls to puts right now, leading the dance calls. 12,283 calls today to 525 puts for call to put ratio today of 23.4, according to our friends in Orats land out there. So, Mr. Rock Lobster, we got some opening calls on the 18 half, which are pretty much in the money now, for $1 going out in, a few weeks or so here. So pretty much in the weeklies at this point. This is kind of old school odd block paper, sir. It seems like some near term swinging of the fences at some upside here in Capri. Is that your takeaway as well, sir?
It certainly is. Do you remember Coors? Remember the under old symbol Coors? We used to cover it like 3 or 4 years ago. It was kind of a hot stock, wasn't it?
Oh, that's right. This is the old Coors. That's right. Yes.
And I don't. Yeah, did they buy Versace or buy some other stuff? Interesting. So it's one of those things where they sell a lot of stuff in department stores, right? And last time I checked, nobody's going to department stores anymore. Although I think people would be dying pretty much to go back into a department store at this point, or if they already were predisposed to doing that. So yeah, I just think this is, it's one of those stocks. You can look at the list. Besides the top, 8 or 9 market cap stocks in the Qs, how many companies where the stocks are down like 50% on the year, where they started the year? At the start of the year, this was a $40 stock. It's an $18 stock. It got as low as $7. It has rebounded. It has not gotten close to that, what I would call that post-COVID glee that we had, where I guess when everybody was they said, we're going to start unlocking everybody. And then, Texas got the cases and Florida got the cases, although all that's subsided now substantially. None of these stocks have gotten close to the highest they were in early June, on the kind of what I would call the relief rally. And I think there was just no liquidity, basically. Everything just shot right up, right? Who wanted to sell when we were finally getting out of it? So this company's kind of slowly making its way out. And my guess is people will be shopping in department stores for Christmas, but I could be wrong. And I definitely have been wrong on how long everybody and how seriously everybody takes this thing. But as right now, it just looks like, it's one of those people aren't really looking at it and they're just scooping up the calls, and it looks like they're making money already, but not a lot of time in this one. Yeah,
this is interesting because they're scooping it pretty aggressively, and also not a lot of time in this print. I should note, listeners, there's more volume has gone up since. So far, it's already about 7 times their ADV going up in Capri today, with about 7,600 total of these 18 halves that our Eye of Sauron found, as well as the most active contract out there today, the October 22 halves, 10,500 of those bad boys on the tape. And all of these leaning heavily toward the ask. So someone's got to have it on the upside, getting a little bit more room to run on the October, obviously, than they are in these weekly SEP that are going away in a couple of weeks. This is an interesting one. I'm going to put this in the to be watched and come back to this one. I'm looking for some news here that might be driving all this upside. I don't see, they're presenting at a few conferences. That's really about it. So this is interesting. Someone clearly has a very near-term axe to grind in Capri. This one may be merit some further analysis here. Certainly going to come back to this one, listeners. What are your thoughts? Capri Sun or Capri Holdings? Let us know in the comments as we keep on rolling. Our final name here on the odd block before we unleash the you unwashed masses upon us in the mail block. Let's go to Bed Bath & Beyond, ticker symbol BBBY. Trading right now $12.13. They of the former, 20% off coupon in your mail every week category. I think they've backed off of that now. A year ago, they were trading $10.71. They got their high of about $17.79. Good year. Back on December 18th, another one that had peaked kind of late last year. And then they kind of hit it rough. By the time of the madness, they got down to $3.43. So not a good start to the year for them at all. And they kind of have been ticking up ever since. They got up to $9.86. That was their high on June 8th. Then they sold off pretty hard to about $7.50. But unlike a lot of the other names you profiled, they have since rallied back above that to where they are right now, $12.18. One of the few smaller mid-sized names out there that has actually surpassed its recent June 8th high, which is kind of interesting. And it seems like we got a lot of puts going up out there today, Mr. Rock Lobster. Our Eye of Sauron is all over some puts out here. Big prints going up. 2,500 of the OC13 puts for $1.99. OC13 puts again, 2,000 more, $1.94.5. Total of 15,000 on the day, Mr. Rock Lobster. And these are going up all over the place on the bid, through the offer. So you kind of got to dig a little bit to see what's going up on these. We tried to dig back a little bit to see some of the earlier prints because these later ones went up at 9:58 and 9:57. We dug back a little bit earlier, a few minutes earlier. That's all it takes in this time frame, listeners. To about 9:55, some of the smaller earlier prints, a couple 600 lots of these puts, they went up for $1.82 and $1.84.5, pretty much at the offer or through the offer. So they were at 169 at 185 when these prints first started going up. So a pretty clear sign someone was probably buying these bad boys, even though the later prints with resting bids and things, it kind of obscures it a little bit. Another good sign is that vol kind of ticked up pretty aggressively. When the first prints went up, the implied vol on that strike was shy of 100, 99%. On these later prints, they got up to about 106 for that 2,000 lot for 194. So looks like bidding the vol up, Mr. Rock Lobster. Looks like a lot of prints all over the place, but a lot of the early ones certainly through the offer. So that seems like someone's got some put love here going, which is interesting because this is an in the money strike in October. So another weird one, not quite as weird as the GameStop one, Mr. Rock Lobster, but still a lot of paper. Over 15,000 were already on the tape coming into showtime today for Bed Bath & Beyond. If you're wondering what our ORATS friends say, it's in fourth place on their scanner versus this 20-day average at about 2.3 times that volume. So Bed Bath & Beyond also catching their eye as well. Mr. Rock Lobster, has this paper caught your eye? And do you concur that these are buying, or think someone's maybe drawing an interesting and in-the-money line in the sand here, sir?
It looks, this paper's still kind of like buying to me. I'm looking at it like it doesn't, unless they got the best fill in history, they were able to sell outside they were able to put a line in the sand trade on outside the op. I'm trying to think of, let's see here. 199. Well, maybe I'm wrong. Let's see. 2, 4. Kind of weird, right? So one print went up on the bid earlier, and the second print went up at a couple cents lower afterward. The way I look at this is, it feels like it could have been if it was a line in the sand trade, it would make sense because they would put the first print up at a higher price. The second chunk would go up at a lower price. Generally, that's, when you crush vol, that's what happens. So it feels like it's a line in the sand trade, although I have to say Bed Bath & Beyond is one of my least favorite stores there is. So I might be the wrong person to ask on this.
I guess that's a good peers trade, right? Which one would you rather be bullish on right now? GameStop or Bed Bath & Beyond?
Oh, my gosh. None of them look very good.
That's a Sophie's choice of everything, except Sophie's choice if you hated both of them.
Well, the funny thing is, all the people staying at home, you think, okay, we have to go out and get stuff for our house, right? You would go to Bed Bath & Beyond and, buy a spatula or some sheets or something. And even then they just, I guess maybe just people didn't go out, but they had really a hard time. But maybe it's a value play. Somebody's looking at a value play. The company has made money in the past. It's not worth very much anymore. Only a $1.5 billion market cap which seems kind of low considering their footprint is fairly large all over the country. Maybe it's a value play. I think Bed Bath & Beyond has a better shot than GameStop does, because I don't know where GameStop's business model goes, but Bed Bath & Beyond does kind of have the home furnishing, home thing, and I mean they suffered, they just suffered like every other retailer did. So I think if I had to choose, I think I would choose the Bed Bath & Beyond over the GameStop, because I think Fortnite's just destroying GameStop. There's just no, my kid used to go there like twice a week, and he hasn't been there in like 3 years.
Why bother? You can just buy the V-Bucks online, and you're good to go, right? There you go. V-Bucks, hanging out. Party Royale, that's where it's at out there. It's interesting. I think I probably have to lean Bed Bath & Beyond as well. They at least have a business model that's foreseeable. It may not be the best, but it's something. That might be a good flash poll for our audience. Bed Bath & Beyond or GameStop. If you had to buy one right now, which one would it be? Interesting stuff. Speaking of flash polls in the audience, let's get to you guys, a little bit of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, let's unleash you guys here on the Mail Block. We'll get to your thoughts on our VIX poll in a second. That ends up tomorrow. That's when it closes, of course, so because it's a closing VIX poll. We'll get to that in a second. But first, Holmes has a question for you, Uncle Mike. Holmes wants to know, does Uncle Mike trade any commodities outside of silver? Uncle Mike, you're a well-known silver bull and enemy of werewolves around the world. But aside from that shiny metal, sir, any other commodities lighten up your interest, sir?
Occasionally, but not too much. For clients, I really don't do anything with commodities anymore, unless it's on the ETF side of it, just because I dropped my Series 3 many years ago to stay pretty much laser focused on stocks, with an occasional silver sprinkled in, of course. But to answer the listener's question, I've traded oil, I've traded the 10-year note, I've traded gold. And the reason is that stocks trade more in an uptrend throughout time, and commodities trade more in a channel, and there's a lot more active management that's required with it. And there's going to be times where you really need to be short or really need to be long. And for my MO, with what I'm trying to do, stocks typically work best for me. But occasionally I'll dip my toe in the water of commodity land, but not often.
There you go, Holmes. Hopefully your Watson is out there hanging out with you as well. Uncle Mike, not a commodity guy so much out there. Let's see what else you guys have on the brain. Trader Rick. He says, this is after we were talking, I think this was like last week when Apple had that first big down day. They lost $180 billion in market cap. It was the biggest loss of market cap for any company in history. And Trader Rick chimed in to say, yep, and yet it's still higher than it was a month ago. And he sent in a chart where it was down around 109 a month previous to that. Yeah, I get you there, Trader Rick. Even at these after these crazy sell-offs, you're still at ridiculous valuations for a lot of these names out here. So certainly not a lot of tears or tiny violins being played here for Apple at this point. Let's see what you guys are thinking here. Looking forward, we asked you guys at the end of Vol Views last week, because it was a bit of an interesting contentious moment. VIX was north of 30. It was about almost 31, about 30 and 3/4. We said, hey, are you guys buying this near-term vol, or is this kind of just a blip? Where do you guys think VIX is going to close coming up tomorrow? And we gave you 4 choices, as we like to do on the old Twitters. Here, so 30 to 33, right about where it was. Higher, north of 33. That's about 34.5%. And then we've got lower, 27 to 29.99. And much lower, south of 27. Right now, the early winner, and still the winner pretty much, has always been north of 33. So they're looking for a little bit of a rebound coming into tomorrow's session. I think I was around there on my Vol Views pick, so I'm kind of with you guys as well. Then we have number 2 is much lower, south of 27 at about 24.5%. Lower, 27 to 29.99, which is pretty much where we find ourselves right now. That's at about 23.6%, and bringing up the rear right here, 30 to 33 with about 17.6%. Obviously, the later votes have a bit of an advantage. Maybe we should shut it down, but we're being nice. We're letting it go all the way through, pretty much to showtime tomorrow. But it still seems like the lion's share of the voting has been on, a lot of you guys have been chiming in on this one, 34.5% for that. That probably has changed since we even started the show. I haven't gone and checked it. Actually, it's still 33.1% right now, with a bunch more votes have piled in since the show here. So still 33 and higher is the winner out there. Pro Thoughts chimed in. He said, when the VIX gets to 30, it will stall until expiration week. Time decay on the options. Well, unfortunately, Pro Thoughts, that does not seem to have been the case, at least for your prognostication. We are shy of the 30 handle. Of course, we could get back there. If our audience is correct, and if my crystal ball is correct, we shall rally past the 30 handle yet again. Only time will tell. We have exactly 24 hours to go until we'll know the answer to this question, at least for the purposes of this poll. Speaking of answering our question, in the chat here, we got J3043. He's our food guy. He's the guy who told us about Philly cheesesteaks and everything else. He's chiming in the live chat. He says, GameStop versus I almost said BlackBerry. That's old school as well. That's been another one to put in there, BlackBerry. GameStop versus Bed Bath & Beyond. I'll stay in cash. Yeah, I'm with you. But for the purposes of our flash poll, that's not the game. The game is you got to buy one, gun to your head. I'm probably going to lead Bed Bath & Beyond, but we shall see. Meanwhile, let's see what everyone else is watching here as we go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Around the block here, where, of course, we tell you what we're watching on our screens until the next time we can gather here together. Let's start with the Uncle List of Mike. So, Uncle Mike, sir, a weird day, another day that ends in Y. We heard you're not a fan of commodities. What else is on your radar, perhaps not on your radar, coming up, sir, into this weekend?
Well, in terms of what I'm looking at, I just think you need to really watch the news right now. And that from a technical standpoint with the S&P 500, one thing that I thought was interesting today is that we got up to around the highs from 2 days ago, and we were not able to get through them. So just trying to lay low as best I can right now in this market, but still have something out there in case we go up higher rather quickly. But just watching the news, and for today, watching the 342 half mark on SPY, and that's about it right now.
342 half for the Uncle List of Mike's. Mr. Rock Lobster, same question for you, sir. What are you watching, at least till we can all gather here together on Vol Views tomorrow?
Same, the vol holds up, because right now, again, volatility is at a place that just think there's nobody selling options. Vol's taking down a little bit today, not a lot. And at this point, without SoftBank jamming all the tech stocks up, everybody, I'm looking for reasons to rally, and I don't have any. Maybe there's certainly some stocks, and there's certainly a lot of stocks that haven't participated. I would like to see some of those participate, especially like oil banks and things like that that are more like economy getting back to normal type stocks. And as of right now, it's just not happening. Not in any way, shape, or form, and not even close. They're all just kind of, they're sort of sitting on life support. So maybe good as a long-term investment, but as any kind of short-term option trade, just very, very difficult, at least for me.
All right. That music means we'll have to leave it there, at least for the old OB. But if you need a little more in your ear holes, want to talk a little more vol, equities, all that good stuff, hit on that pretty hard. Coming up on TWIFO in exactly half an hour, we'll be joined by the once and future Dr. VIX, as well as some others on that program to break down the new NASDAQ vol product, what it means out there, what's going on in equity vol, the term structure, all that good stuff, as well as what the heck's going on in energy, moving and rocking and rolling yet again this week. Maybe some metals, like you said. Who knows? Your questions are going to drive us out there as well. So I think we have some stuff about how does Bitcoin relate to some of these other categories and commodities out there? All this other stuff. We're going to break it all down on TWIFO in a little bit. If you're listening live, stay tuned. We'll pump some fun stuff into the live chat, maybe an OPR, maybe an OPC, and we'll be back in exactly half an hour. But before we do that, let's go back around the horn. Let's start with the Uncle List of Mike's. Mr. Uncle Mike, sir, if folks are intrigued, they want to reach out to you to talk other commodities, where should they go? What should they do?
I'll talk to you. Not a problem with that. Go to my website, stcharleswealth.com, if you want to talk to someone who is a financial advisor and not afraid of the option product, and in fact, is very fond of it.
There you go. He's not afraid of the option product. Just maybe not a huge fan of the soybeans, but he'll talk to you about it. He's that kind of guy. And if you go in person, he'll buy you some Skippy's, gyros, and lemonade with a mask, of course. stcharleswealth.com is the place to go. And Mr. Rock Lobster, if I want to ask questions of Volman, where should I go? What should I do?
Where should you go to oxford.com? Look up our memberships. All kinds of things. The way to get your learning on. You could go in as a sharp betzer and just look at follow trade. We got a great record this year with Mark running it. You go to the Trading Legion. We have a great record with that. I run that one. We go to Vol Trading Club. Great win-loss record in that one this year. Just get your learning on. You just decide what you want to learn, and we'll help you do it.
Get your learning on. OptionPit.com is the place to go. And on behalf of the rockingest of lobsters and the unclest of Mikes and myself, thank all of you out there for downloading, streaming, subscribing, for voting on our polls, for sending in your questions, for listening live, all the other fun stuff that you do. Keep them coming. Remember, if you like what you hear for the network, keep those reviews coming. It really helps new folks continue. And there's been a huge bunch of them coming in these days. We want to keep that flow coming, so leave those reviews on your platform of choice. New folks can continue to discover the programs. If you're listening live, stay tuned. We'll be back in a half an hour with some fun stuff in between. Otherwise, if you're listening after the fact, just hit next. And then we'll see you back here next week for more of the Option Block.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.